Welcome to this video. Today we are going to be looking at a trend, how to draw the trend line, and we're going to be looking at our first trend indicator and how we can use it to make a trade signal. But before I want you to know that engaging with CDF markets comes with a lot of risk, so you should have enough experience before you engage with them, especially with the live account. So trading CDFs is very risky and is not suitable for all investors. So these videos are made for educational purposes and they're not made to induce your decision when engaging with financial markets. So you should make your own decision before you engage with financial markets. So today we are going to be looking at how we can confirm that really, yes, this is a trend line. So how we confirm it is a trend line, it should be tested more than once and price resists upon reaching it. So for example, in this market, it's downtrending. So if you were to draw a trend line from here, obtained through the other tool there, and we draw our trend line, maybe say from here. From here, so that would be our trend line. As you can see, it was tested here, again tested here, again tested here, again tested here. So it was tested 3 times. And here it was tested, price went above it. Unfortunately, it could not continue further. It came down. So as you can see right now, the price is still coming down. So after having looked at that, that's the first way we can confirm the trend. So the other way, we're going to be using our first indicator, which is going to be a moving average. So how would we add moving averages to our chart? And before we look at how to add moving average, so moving average is a trend indicator and should not be used alone to open a trend. So you should back it up with other indicators. You should not use it alone to make a trend. So you should back it up with other indicators before you open a trade position. So how do we add the moving average to our chart? We come to insert, indicators, trend. We're going to add on our moving average. And the moving average side, we're going to be looking at 2 particular indicators, the simple moving average and the exponential moving average. So I'll make this color green. Say okay. So my indicator has been added to my chart. So how do you identify the trend using a moving average? If the price is below the moving average of the 60 period moving average, the market is downtrending. As you can see from here, the market, the price crossed below the 60 period moving average and it continued to downtrend downwards. So this is a simple moving average. What's the difference between the exponential moving average and the simple moving average? The simple moving average gives how can I say, priority to old prices, but the exponential moving average, it has more of recent prices. So to my trading, I normally use simple moving average. You can change this to exponential moving average and see how it can be. As you can see, it gives more priority to the recent prices. So you can see there is no difficulty. Let me add also 60 moving simple average here so that we can see the difference. Need to make it simple and I give it a color of blue. So as you can see, this one is a little bit, this is the exponential. It gives more priority to the new prices than this one, which it gives priority to the old prices. So based on how you're going to use these two, so you'll come up with your own strategy and select your best indicator. But I encourage you to use both of them and see the one which works best for you in your trade setups. As per this video, I'll continue using the simple moving average, which is blue. So I'll delete this one. In order to delete an indicator, right click on it and delete the indicator. I'll have it green. So I'll keep it lime for now. So when the price is below the 60 period moving average, there is no doubt the market is downtrending. Even if you don't draw the trend line, the market will always be downtrending. And never in your trading experience ever go long in the market that is below the 60 moving average. You should never ever try it. Even if the price is here, never, especially if you're going to hold your position for long. Trust me, the market will open a long position and the market will not go up. It will, after some time, face a resistance, reach a price level of resistance, and then it will go against you. So whenever the price is below the 60 moving average, we should only consider selling it, not buying, not opening long position. So how do we use a moving average to act as a trading signal? So I'll add another moving average, which is going to be half this. It's going to be 30, and I'd like to make it red since it's going to be my signal line. So the 30 moving average is going to act as my signal line. So how do I use it to enter a market? Remember, as I told you earlier in the video, you should not, based on the moving averages alone, place a trade. So how do I use this as a trading signal? Based on other indicators too, shall be looking at in the future. So when the 30 period moving average crosses the 60 period moving average from the downward side, for example, it has been above the 60 period moving average, but unfortunately it closes it. For example, here I can, this is a signal for the market is going to fall down. It's going to change to a downtrend. So if you go short here, as you can see, if you went short, for example, here, the price rallied down this side. So here it acted as our trading signal. Again, here, as you can see, the 30 moving period average crossed the 60 moving period average by this side in the bullish side, but the market could not sustain. It reached some price of resistance and came down again. So how do we use the moving average as a trading signal? We use it during the crossings between the 60 moving period average and the 30 moving average. When the 30 period moving average closes the 60 moving period average going up, that is an uptrend, so it's a signal that the market is going to go up. When the 30 period moving average crosses the 60 period moving average, but this side going down, the market is going to be bearish. So that's how we use it as a trading signal. Remember, don't place a trade based on the moving average alone. You have to include other indicators too in order to confirm the entry points so that you can profit in the market. So in the other video, we shall be adding more indicators, both that will help us obtain know on this price level we can go short based on this moving average. So keep tuned, and also I would like to let you know that there is a YouTube channel still in the same names. I'll share the link in the description so you can also follow and subscribe. Also I'll keep uploading video both here and on the YouTube channel. So thank you for viewing. See you in the next video and the next indicator we shall share. Thank you for watching.